Now, sometimes the issues or the story behind it are fairly complex or may even be multiple issues. We're going to take a look at this 13474, and you'll notice the invoice date is at 1/2/2020. I did state it earlier, we started this company file beginning on January 1st of 2020. So it's possible that the job didn't get done until the beginning of the 2020, but there may have been payments made to this job prior to that that wouldn't even be in QuickBooks at this time. Again, we can double click on the invoice and it shows us what our invoice is, our invoice total 2272.31, and we can use the Control H key to look at the history of the payments, and there were 2 payments made. So basically shows us we have a balance of $766.81. As I said at the beginning, we always want to start with CCC1 or the management system first. So when we toggle over to the management system, and I have already got the search term set up for this 13474, we open it up and we go into the payments or the receipts, and you'll see that there is a credit, which is what they were using prior to setting up different types of payment types for 12/27 of 19. So there is part of the problem here is that this payment was actually made prior to the QuickBooks starting. So that's going to be one part. But as you'll notice, it only shows that it was $598.49, and QuickBooks shows that there's a balance due of $766.81. So there's something else that's causing this mismatch. So when we go back over here and I look at it, this says the repair order total is only $2103, and this one says that it's $2272. So the best way to do that is again, we look at the rates and we go into taxes, and this one says 0 tax rate. So I'm kind of was understanding that, well, maybe this happens to be possibly a municipality or something that's tax exempt. And if that's the case, that's fine. But there is a process in QuickBooks to handle that as well. And we can verify that by going to the estimate and going to the totals. And we go over to the far right column, we'll notice that there is no tax. So let's go back over to QuickBooks and see what happens here. If we were to change this from the sales tax, which normally every customer that's in QuickBooks is normally set up for, and change it to tax exempt, we're going to get a message about the sales tax that allows us to set this up. And I would say that we would, if this is a exempt organization, it should have been actually billed to whatever the department name is and not just the individual sergeant at the time. But we would set this up as a tax exempt customer in QuickBooks. And so the next time that this comes over, it will automatically not tax it. And what it does now, we can see, is that our amount of our sale matches, and the amount, the $598.49, is the same amount that was prepaid last year. So since both of these are 0 in CCC1, there is a process in which we need to save this so the amount is now corrected. Unfortunately, you've probably already done sales tax at this point and paid the sales tax on the higher amount. Now, it's a good thing is QuickBooks keeps a running total of that, and so you will get that credit back somewhere down the line. So we have a $598.49, which was paid in a prior period, as we call it, or it was actually a prior tax in at QuickBooks. There are a couple of ways of doing this, and the easiest way that I've found, though, is I've set up a memorized transaction report, or a memorized transaction for this. So we have an adjustment prior period. Now, I wouldn't want anyone to use this on a large scale unless it was absolutely necessary for a very specific issue, such as this QuickBooks had actually started after the payment. So what I want to do first is I want to go over to, and it's going to be 13474, and it's going to be $598.49. Those are the two numbers that you need to remember to be able to do this. I generally write them down because after a while they start blurring as far as the numbers are concerned. So I go back over here to QuickBooks, and I want to go back over to that transaction or that chart here, adjustment prior period. Double click it to open it. It is another $0 check. So I'm going to put in 13474. And in this one, you'll see that I have the steps actually outlined right here. It's going to be adjustment. Now, because it was prior period, I'm going to put this as January 1st at the beginning when we started. So it is going to be a prior period adjustment. Don't know why that didn't stay, but we will put that over here to make sure that that's there. And this says I'm going to put in the amount as a negative number. So it's minus 598.49. And then it also tells me that I need to put in the RO number 13474 here. That's the easiest way to pick up the customer. And then I put a positive, same amount, 598.49. And I put the RO number here again. So I've got the customer and RO number in the pay to order, got it in the customer jobs in both lines, and I start out with a negative and then a positive, and it's going to basically apply it to the receivable, and then it's going to then move it into the prior period adjustments. If I use Alt A for save and close, and then I move back over, I want to close this window right now, and now I've got a check and I've got an invoice. Now, we knew how we did it when we did a payment. We just double click the payment and check the checkbox. If it's just an invoice, you click on the invoice, open it up, and then you go up to apply credits. And now that credit is going to be there. We hit done. We hit Alt A for save and close, and now that is gone. So in that particular example, there were actually two issues. One, the customer was non-taxed, and because it wasn't said it was non-taxed when it came to QuickBooks, QuickBooks then set up a tax for it. So that was the first thing, and then it matched the amount that showed for the prepayment. Now that prepayment was made prior to us starting as QuickBooks, so we couldn't really put it in for this year because it actually went in for last year. So we then created an entry that credited the accounts receivable that was thought to be owed because it was prepaid, and then we put it into prior period adjustments, which is basically going to just transfer or distribute to your retained earnings